This is general information and not advice. Please speak to a licensed finance professional about your circumstances. Stanford Financial is authorised under Australian Credit Licence Number 541480. Further information is available at stanfordfinancial.au.
Hello and welcome to Ipswich's Real Estate Podcast, formerly On the Couch with Steve. This is obviously a podcast where we help you navigate the often complex world of buying, selling and renting real estate here in the Ipswich real estate market. I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. I'm joined today by a great friend of the show, Steve Beach from Stanford Financial.
How's it going?
Hello, Stephen.
Hello, Stephen.
How are you?
I'm good, thanks, mate.
Well, mate, I'm very good. I'm very excited. We've got something very, very topical to talk about, and it's interest rates. And today is interest rate cut day, or is it? What happened today with the Reserve Bank?
So we finally got our first rate cut in 5 years. So very, very exciting. So a big thing. So the official cash rate dropped from 4.35% down to 4.1%. So and instantly we're already seeing all the major four drop their interest rates and a lot of the other smaller banks.
So they're not waiting a couple of weeks to do it. They've already dropped.
So they've announced that they've dropped.
Right.
But the date that they actually implement it to the banks haven't actually been.
So they haven't announced that part.
No, so they've just come out saying we are offering straight away a 0.25% rate cut as per the RBA announcement, and then ultimately details to follow. So everyone will be getting, whoever's got a current mortgage will be getting an email over the coming days to say, hey, as of this date, your interest rate will drop.
Beautiful. And I think I saw online $500,000 mortgage. $70 a month difference, something like that. Does that sound right?
So I'm going to say our average book, I think we worked out to be about $1,000 a year. So so about $80 a month sort of saving at this point in time.
Nothing to sneeze at?
No, definitely. I much prefer to have $20 in the back of my pocket, that's for sure.
Okay, now this is the part where we need to come clean. You weren't on the last episode.
Yes.
We had Logan, the big boss, last time, and we had to make predictions. Now, if my memory serves me correctly, Logan's not here to defend himself, but we both said we were thinking it was going to be put on hold, and we would not get a cut. This is the first time ever on Ipswich's Real Estate Podcast that we were being wrong. First time ever.
See, I get to say that I was still right because
I
wasn't here.
Because you weren't here. You were on holidays or something.
I had actually told Logan that I predicted pause.
Right. Okay, so Logan, he's got a cross against his name. He's been wrong.
Yep.
Okay, I'm not wrong. I was just mistaken. All right.
Yes.
There's a difference. But at the end of the day, look, the good news is for everyone out there, there has been a cut, 0.25%. It's been passed on almost immediately. So there is definitely some relief. Now, I guess that's the really, really exciting part. Now, I've heard some stories that some of the economists are saying that we could get anywhere between 2 and 5 rate cuts this year.
I guess, so what we've sort of seen was a lot of the information from economists, banks, everyone's predicting 3 rate cuts this year.
3.
So I guess
that is between 2 and 5.
It is between 2 and 5. I guess we don't know. I guess at the moment we're sitting in a disinflation. So we talk about what the inflation data is. So it's essentially how much we spend and how high of a CPI that we have. At the moment we're seeing that number consistently go down, which is essentially disinflation. So.
But what about the underlying inflation? That's been the real tricky part. I've learned a lot here on Ipswich's Real Estate Podcast. Tell us about what happened with underlying inflation.
So we've got headline inflation, then you've got underlying inflation or trimmed inflation. So at the moment we went from 3.5% down to 3.2%. So that's the headline inflation. So that's the higher one. And then we essentially saw after they take into consideration the trimmed inflation was 2.4%.
What were they predicting? What were they hoping for?
So they were actually expecting it to be at 2.5. So it came in below what they were expecting. Last quarter, we were sitting at 2.7, so it dropped down to 2.4. As, again, with the higher inflation rate, which was at 3.5, dropped down to 3.2. So a lot of the figures that they were, analysing came in actually lower than what was expected. So hence the reason why over the last few weeks, every single economist and banks just going rate cut, rate cut, rate cut, rate cut, rate cut, based on the statistical data that we saw for the December quarter.
Okay, so why has it dropped so much? What's the underlying effect? What's the Treasurer, what she said about, the Treasurer, Reserve Bank Governor, what she said about why, what was the ultimate decision? What's the drivers?
I guess if you look over all of inflation, as we go through, rent, insurance, services, electricity, everything that essentially calculates into what the CPI and the inflationary data, everything has gone backwards. The biggest thing that they were talking about probably through sort of the question time after the RBA announcement was disposable income. So, everybody earns a wage and then you have your bills and then you have a certain amount of money left over. I think we touched on this about 6 months ago where everyone was sitting in a negative sort of situation. That hasn't really changed. So people's disposable income hasn't increased. If anything, it's slightly gone down with cost of living continually going up. So what we're seeing is people just have less money to spend on recreational goods. So essential goods always get paid. Everyone always pays their rent. People always pay their insurance. People always buy food. You're not going to go out the essentials of life, but people aren't going to the movies. People aren't going out eating at restaurants or buying extra.
But isn't it funny though? Like if you go to a restaurant or a pub or something like that, the place is packed. But they're saying that people don't have that income. But if you go out, you really wouldn't think that there's anything going on with cost of living. Like, do you find that yourself when you go out?
I do a little bit. I guess there's, I think you'll probably find a lot of the people that are still going out still have that higher disposable income. So they're still sort of not really feeling the effects. It's funny, Logan and I were sort of talking about it the other day. Inflation is almost like a tax that everybody pays. So it's as inflation grows, and people going, if inflation was 7.8%, sort of mid COVID, and we're now sitting at sort of 2.4%. Why is milk and bread still as expensive? Why is everything still that expensive? So inflation is actually how fast costs of things grow. So while inflation goes up, essentially the cost of living goes up. So milk goes from $2 to $3 to $4 to $5, and if we're just consistently seeing this 5 to 10% inflationary growth, people aren't going to be able to afford, because that's why we saw wage growth increase so rapidly sort of last year, is to try and catch up with that sort of inflationary data. So now inflation's going down, wage growth is stabilising, unemployment is sort of stabilising as well. So there was a slight tip up in unemployment again, so it went from 4 to 4.25. So like everything is heading in the right direction from Australia's perspective.
So are they still sort of hoping that unemployment goes up further, or
no? So originally it was always around that sort of 4.5%, which is what we sort of talk about, sort of full employment. So they're sort of revising figures because there's so much more. The biggest thing is probably population growth. We've still got a lot of people coming into the country. People are still having kids. So there's a lot more, potential for employing people. So as there's more opportunities out there, there's also more wages that are being paid and everything along those lines. So all we see is, unemployment at a lower number, but new employment is actually growing quite at a rampant state as well.
Because there's obviously been a lot of discussion about potentially that we have too much migration. But I think the thing with, generally speaking, most migrants, they're looking for skilled migrants who are effectively employable and stuff like that. So we're not, even when we are bringing in migrants, we're not bringing in a lot of people who can't work or...
No, so skilled visas is essentially what we're seeing the majority of. And there's a lot of means testing to go with that as well. So people are coming in with degrees and jobs, and a lot of times people are coming in on a working visa or a 457 visa. They're coming in as a nurse or a doctor or a teacher or something along those lines, hoping for the opportunity to be able to, gain that permanent residency and then continue staying here.
All right, massively informative as always. Now, when does the Reserve Bank meet again?
So technically it's March, but it's like the last day of March with the RBA announcement on the 1st of April. So to give them enough data to be able to make that.
April Fools.
Well, I didn't even think about it. Hey, there's a
Strange
0.5% rate cut. Woo! No, April Fools.
So could be some prankery on the 1st of April on.
I seriously doubt anybody would make a prank on that one from an RBA or a government perspective. With the, I guess, looming election coming up through too as well, we'll probably see a lot of sort of government sort of promises in regards to a lot of sort of opportunities there. So a big thing that we did see coming out in the last sort of couple of weeks is foreign investors. So both Liberal and Labor parties have both pretty much jumped on board saying that they're going to stop foreign investors from being able to buy properties as well, to give, I guess, the Australian population a chance at purchasing properties as well. So we still don't have enough supply of properties coming into the market, as you would very well know.
Absolutely. If you want to sell your house, please give us a call.
So there's definitely there's definitely buyers out there. There's just not enough houses out there. So it's just one of those things where supply and demand. There's just not enough supply.
Sometimes there's a recurring thing. We've seen this foreign investment thing before, where they at different stages they'll try to restrict, and then ultimately they obviously ease the policy, and then they allow foreigners to reinvest again.
The policy that they're sort of promoting at the moment is a 2-year ban. So it's essentially for Australia to catch up with the supply of houses. So building, essentially, rather than just consistently building house after house after house, they're actually now talking about unit complexes. So to actually try and stimulate more growth of available properties at a faster rate.
So obviously they just want to increase density, fit more people into a smaller land mass, and effectively try and solve the housing crisis that way. All right, awesome. Like I said, incredibly informative with your knowledge. That's why we get you in. That's why you are the guru.
Oh, I'll take your word for it.
I think he's way too modest. Now, obviously, we get to this stage where we now know that the next decision will come out on the 1st of April. What's going to happen with rates?
I personally, I'm probably going to predict that they will pause, simply because they did the rate cut now. I think they'll probably see what sort of impact, because it does take about 6 weeks for anybody to realise the impact of a rate cut. So anybody that actually has a mortgage, even though they say the bank might go, hey, we're going to cut your rates now, your mortgage payment this month is still due. So the rate cut will then come into effect next month when your mortgage payment is actually being paid. So the cause and effect is going to take a little while before we actually see the impact. So I'm still sort of predicting pause. Michelle Bullock actually sort of talked about, the target inflation's always been between 2 and 3%. 2.7% is now the curve. It used to be they always wanted to be at 2.5. And she even announced that she was expecting another 2 rate cuts this year to get to that level.
And we haven't got a date for a federal election yet, have we?
No, not yet.
No.
I think it'll be coming in the next week.
On that basis, I'm going to defy the trend. I'm going to go for another cut on the spirit of an election, and I think they will try to stimulate the economy and try and give everyone a bit of a crack. So, just to be interesting, and because I think it will probably happen. But if it doesn't, we've still got you, the resident expert, so we don't lose all credibility. And you've never been wrong. But I think we might get another one. And hopefully, we'll see what happens, but they slip another one in just to see if they really can get that some sort of stimulants going there and getting the economy going. So you heard it here first. Back to back interest rate cuts. We'll see what happens. I know you're very afraid about that.
I would love to see that. Definitely
I would love to see it too.
make my job a lot easier.
I'm going to punt for back-to-back interest rate cuts. So we'll have to stay tuned to see what happens. Mate, any other news for us before we part?
No, I think that's sort of the main bulk of sort of what's happening. I'm a bit excited to see what happens come the 1st of April, and I'll look forward to coming back here.
Well, hopefully there's lots of people out there who are super excited, decide that they're going to start buying some stuff, and there'll be more loans and stuff for the team at Stanford Financial. Yes? Logan,
Always.
He would love that sort of thing. I have met him. He likes money. We'll see what happens. All right, guys. Now, listen, thank you so much for joining us for this super special announcement. We have seen a cut in official interest rates for the first time in 4 and a bit years. First cut?
First cut.
first cut in 4 and a bit years. So you heard about it here first on Ipswich's Real Estate Podcast. As always, if you like what you've heard, if you got any comments, we'd love to hear from you. Please subscribe to the link below. We'd love to get your feedback. As always, thank you so much to Steve here from Stanford Financial. Thank you, mate, as always. If you'd like to see more of what happens on Ipswich's Real Estate Podcast, please join us for the next episode. We'll talk to you soon.